What's up everyone, it's Scotty with Money Vesting. In this video, we are going to be talking about one of my favorite companies. It is by far the highest quality company out there, but there is a catch, which we are going to discuss in this video as well. They are going to be reporting tomorrow after the markets close for the first quarter of fiscal year 2023. So in this video, I'm going to break down exactly what the expectations are, what the revenue status looks like, earnings, cash flows, valuations, and of course, the intrinsic value calculation for this stock, whether it makes sense to buy the stock today or if you're better off waiting for a better price. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining us. It is the first week of the month and it's usually the best time to join and of course take advantage of all the benefits, including private live streams that we do Monday, Wednesday, Friday, and all the private videos as well. So the company that we are talking about today is going to be none other than InMode, ticker symbol INMD. And InMode is going to be reporting earnings tomorrow, like I said, after the bell on May 2nd. And the company develops, manufactures, and markets minimally invasive aesthetic medical products. And if you don't understand what that means, just know that they provide products, or they manufacture these devices which surgeons use to further do operations for plastic surgery and of course help their patients. So that's what they really offer, and they are based out of Israel, and they've got incredibly high margins. And one more thing that I want to mention is that they did have a tax holiday for quite some time, which is going to be coming to an end very, very soon here. And as a result, they could be paying a higher tax rate. And as a result, the earnings per share may get affected because of that in the future. Now, when it comes to revenue, absolutely incredible, not to mention a straight up growth here, exponential from 23 million all the way to 453 or $454 million. So they have more than 20x revenue in the last 6-7 years. Gross profit, very, very nice. I mean, you can see incredibly high margins. We're talking 75 to 80% margins for this company, from 17.4 million to over $380 million. And operating income has gone from 0.7 million, so like less than $1 million, to over 197, almost $200 million. So 200x growth in operating income in the last 6-7 years. Net income has also grown from 0.3 million, so less than $1 million, to over 161 million as of last year. And share count, you'll notice, has been very, very flat at around 80 to 85 million shares. We have increased from 2016, so 53 million has gone up to 85 million. But if you strictly notice, in the last 3 years, the company has not issued any more shares. They have just stayed them constant and flat and just trading sideways. So on our hands right now, we've got a company consistently growing revenues, excellent margins, and growing gross profit, operating profit, and net income. And the shares outstanding has been very, very stagnant over the last 3 years. Balance sheet, huge check. $547 million of cash, less than $5 million of debt. And as a result, net debt is negative $542 million, with a current and quick ratio absolutely incredible at over 7 to 7.6, and debt to free cash flow at less than 1. This is the definition of an A+ balance sheet. Absolutely zero solvency risk based on the balance sheet that I'm seeing at the moment. This right here is going to be the margins, 83, 84% gross profit margins, net income margins at 35%, and we've got return on common equity, assets, and capital absolutely fantastic at 25 to 33%. So again, this is a phenomenal company. Like, if you talk about quality and well-run management, InMode is at the top of the list. Valuation, even valuation is decent for InMode. So 15 times earnings, 14 times earnings, and price to sales trading at a little bit over 5 to 6, and enterprise value to EBITDA, we're trading at under 13, and price to cash flow, we're trading at just about 14 to 16 levels. So we've got, strong growth, we've got great balance sheet, little to no dilution, and an excellent valuation, or reasonable valuation. Where's the catch, Caddy? What's going on? Why are we not buying this stock? Well, I'll get to that in just a minute. This right here is going to be the earnings expectations from the company tomorrow. So 48 cents is going to be that EPS expectation, with $103 million in revenue for the first quarter 23. Again, they're reporting tomorrow. Actually, I want to make a correction. They're not reporting after the markets close. They're reporting pre-market. They're reporting before the markets open tomorrow. So May 2nd, Tuesday, before the markets open. So I want to make that correction. It's pre-market. This right here is their own press release from April 12th. And they mentioned first quarter 23 revenue between 105 to 105.9 million and non-GAAP EPS between 50 and 51 cents per share. So these are some of the expectations from InMode moving forward. Now, here's the reason why InMode is a little bit of a not the best at this price, because right now it is trading at a little bit over $37. So we have consolidated sideways for quite some time with a high of around $40, $41 with a low of about $27, $28. And we're right now trading at $37 per share. Now, the problem with InMode at the moment is the actual growth, the future growth, right? Because for every company that we decide to buy today, we're not buying for the last 5 years worth of earnings growth or revenue growth. We're buying it because we believe the next 5 years, the next 10 years are going to be much better for the company. Now, unfortunately for InMode, that is true, but it's not at the same rate as what we have already seen in the past 5 years, 10 years. Now, you see, it's a very product-oriented business. It's been selling all these manufacturing, products, and it's been selling all these different equipment, but it doesn't have a SaaS model yet, right? It doesn't have a subscription as a service model, right? So what's going to be that recurring revenue for the company over the next 5 years? Because these manufactured equipment definitely have a life cycle, right? If somebody buys it today, they're going to use it 5 years, 7 years, 10 years, and they're not going to replace it right away every single year. So about 90 to 95% of revenue that InMode gets, it gets it from the manufacturing and development of these equipment. So the expected revenue and earnings are going to slow down, right? Revenue is still expected to be growing at 16%, 15%, 14%, but the net income and the EPS is slowing down at 8%, right? 12%, 14%. So if you do the math at 261 to 334, that's going to be a compounded annual growth rate of about 13%, which is not terrible, right? But it's definitely, not considered as a growth stock, right? It's more, I would say, somewhere in the middle between growth and value, because 10 to 13% is, even though respectable growth rate, it's not a growth rate. It's not a growth company's growth rate, right? That's what I mean. So 13%, if you plug in, let's say 10%, just being on the safe side here, 10% growth rate, and you give it a P multiple of 15, exactly where it's trading at the moment, a discount rate of 12% and a 10% margin of safety with some share buyback priced in, we end up with a fair value of $24 per share. And right now it's trading at 37, which means that it would need to come down at least 35, 36% in order for it to make sense. And for us to, even after assuming a conservative growth rate of 10%, for it to make sense. This right here is going to be that sensitivity grid for InMode. And again, you can see that for yourself, depending on different P multiples and different growth rates, where the fair value might end up for this company. And right now, since it's trading at $35, $37, we're around here, where the market might be assigning a bit of a higher P multiple, or at least a higher growth rate for the future for InMode moving forward, right? So we're more likely over here at close to $34 to $38 right over here. So 15 to 17 times earnings with a growth rate expected at 18%, which definitely is on the higher side of growth rates. So right now, unfortunately, it is priced for a little bit more optimistically. However, more from a technical standpoint, you'll notice that we have been trading sideways. So it can be seen as a bit of a bull flag formation for InMode. So you can see that we have just been consolidating sideways here. In that range between 35 to as much as $38, and this right here can be seen as a little bit of a pull for that bull flag breakout. So this right here can be the pull, consolidation, and a potential breakout to the upside could take us to as high as $40. So this right here is going to be that resistance, and that's going to be about a 7 to 8% potential upside for InMode. And support level is going to stay put at $27, $26. Now this right here is a level where I would be considering starting a new position, because our flexibility range is going to be on the high side at $25. I'm not going to be super strict with that $23, $24 fair value, but even at $25 to $27, I'm happy to at least get some skin in the game and start a small position. And if it continues to sell off, establish a bigger position. I've traded this before, traded it from 20 all the way to 40, so had that nice 100% rally in InMode, but right now I don't own it anymore because of the fact that the future growth is not being priced in well enough, considering the market price is still at over $37, $38. So 27 is where I would be looking for as a support and a potential starter position. And from a technical standpoint, we are in a potential bull flag, which could break us out to $40, $41 if the earnings actually end up beating expectations and the guidance also come in well above the expectations are. However, InMode has a history of under guiding and then over delivering every single time. So I wouldn't be surprised if they once again under promise after tomorrow's earnings, and then as we are leading up to the earnings, they make an announcement which makes the stock pop once again. So hope you guys enjoyed this video, and let me know your thoughts down in the comment section below for InMode. Are you buying, selling, holding? What are your views? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.